Hey, everybody, it's Jeff here once again with our Money Trekker podcast. And today we're going to talk a little bit about economics. They're starting to get a little bit mixed. And so Tom will talk a little bit about what's going on from an economic standpoint in our world. We're going to get a COVID update. One of the great things that's happening is a ton more vaccinations are happening right now, which is causing, states like Texas, where we live in, to see rates go down really significantly on hospitalizations. And that is wonderful, wonderful news. Tom will have some mixed information on the economy and talking a little bit about those. And we have a really most interesting thing for the day to talk about. So join us back here in just 1 second. Hey, everybody. Welcome to the Money Trekker podcast. And I am here with my friend, Tom Kemler from BK Wealth Consulting. Tom, how you doing, my friend?
Tremendous, Jeff. How are you?
Fantastic. It is a phenomenal spring day here in Texas. And why we all live here is these kind of days. So
absolutely.
Looking forward to a little bit more of this before it gets blazing hot.
Exactly. Yeah, it's middle of Holy Week. And so with Easter coming up, I got kind of my Easter colors going here.
All right.
And since we are not going to be doing a podcast on Friday because of Good Friday, this will be our last chance before Easter. So
absolutely. Happy Easter to everybody out there, those of you that celebrate. If not, happy Sunday to you at that point.
And happy Passover, I think, started on Saturday, I believe.
Yep. Absolutely. So. Okay, well, Tom, I know we were going to talk about economics and COVID and some of the stuff we've been talking about, and the most interesting thing. What do you want to get started with first?
I thought we hadn't talked about COVID for a while, and we won't spend a lot of time there, but it's been a few weeks, and so I thought I would go ahead and share the screen. Do you have a shared screen?
Ooh, yeah, it would help if I let you do that, right? There you go. You're good.
Cool. So here we are with a shared screen, and you should see our COVID-19 chart. This is from the ourworldindata.org website.
Man, if I could just buy a stock that does that, I'd be a camper.
So as of yesterday, there's been over 143 million vaccinations given. That's total number of vaccinations, not people. So for people to get 2, and in some cases, I'm even hearing 3. But so on a 7-day rolling average, we're now up to almost 2.75 million a day, and we're regularly seeing over 3 million a day. We had 3.5 million on Saturday and 3.25 million yesterday. So again, it was maybe a bit of a stretch when we talked about it, but we do the math here. And back in January, I said that we should be at a herd immunity level by the end of April, and we're certainly going to stick with that. Between the number of people that have contracted it, beaten it, and gotten vaccinations for it, we're going to be at a level where there's going to be probably a lot fewer cases, and that's when the economy's really looking to take off. Mm-hmm. So I'm going to take a detour now into the economy because we've had some mixed stuff here lately, and our listeners would remember that for the most part we've had a lot of strength that wasn't expected, and we're starting to see some modulation to that, including we got the Chicago Fed National Activity Index, which is probably one of the most important numbers that you've never heard of on a regular basis, but we've talked about it here. This came out a week ago today, and the prior number had been revised upward, and this is a number that varies around zero. So, it'll be fractionally positive, fractionally negative. They revised the prior one upward, and the consensus was to be kind of near where the prior number was, and yet really laid an egg. I mean, a minus 1.09, that was a huge drop, well below the consensus range, dragged the 3-month moving average all the way to negative. So not a good number. And this isn't just, this is national activity index. So, the weather that we had in the Midwest in February, that had some effect, but it also is picking up the fact that with the lockdowns that have even gotten more intense in places like New York and California, it really started to work on business activity levels. Home sales. Now the whole real estate, residential real estate market that's really been driving the economy has hit a bit of a soft patch here, at least for 1 month in February. And again, this may have been weather related, but we're just pointing out when you see a number that misses the consensus range, which this one did, and the prior number was revised very slightly lower, but that's over 400,000 units of sales that disappeared, and so you can see that month over month number was pretty substantial at a minus almost 7%. New home sales, same thing. Prior number was revised a little higher. The consensus was supposed to be close, came in 100,000 units less, and well below the consensus range. Durable goods, this is our last bad news. Durable goods had, as we noted in January or in February for January's numbers, that durable goods have been on a streak of 9 consecutive months of advances. And that's a number that historically it ping pongs around between positive and negative. So I'm not going to make too much of a negative month after as long as we've had. But again, the usual cadence is a positive month, negative month, and somehow you have to sort through that ping pong to see where your trend is. Mm-hmm. And in this case, we've had the first negative month in 10 months. And so it bears watching. This could be just a sign that durable goods are going back to normal. But, it certainly was a long stretch there where there wasn't any negative.
Now,
corporate profits.
Most of these are a monthly number, just looking at comparison from last month. We're starting to roll into those, year over year numbers and stuff like that, comparisons from last year that we're going to be running up against some pretty big numbers next year. So it's going to be kind of interesting to see what goes on.
Yeah. And if I do a deep dive on durable goods, this format, you might see this is all month over month changes. And so we'd have to actually go to the Commerce Department and pull up to do a more deep dive to see how the year over year stuff is going. Yeah. But the month over month, and that's one of the reasons why this is such a volatile index, is that it's reported on a month over month basis. Mm-hmm. Corporate profits, this is Q4. So Q4 year over year was, comparing to Q4 of 2019 with Q4 of 2020. I'm surprised that year over year was actually positive at all.
Yeah, I was going to say, but anything positive, I would go, woohoo, we're there.
It was. Now they, making, and these inventory and consumption adjustments, they're pretty standard. So, they did lop it off quite a bit, and turned it negative, but not in a huge way. Mm-hmm. Redbook, we've talked about Redbook. a number of times. This is chain store sales on a weekly basis. Only reason I pulled this up is this is a giant number, 9.4%, because we had highlighted 8.5 being a really big number last week. So, and this is not, again, this is not online sales. This is people going to the stores. So we're seeing real traffic in the stores, and that's a huge number. I mean,
just think when you unload, when you get the coast back up and running again, I mean, that's going to be a huge number.
Yeah, it will be. Now, as far as nuance goes, this is store sales, but and I guess I could reach out again, but I don't know if this counts, like, if for people that are ordering online and picking up at the store. I think that's kind of a hybrid transaction.
I think that was the question that I had, and you checked on it to say.
Yeah, well, I checked on just online sales, but it's in-store sales. So the question is, do they call it an in-store sale if you pick up? And I don't think they do, but it is a bit of a nuance. But in any event, just getting back to it, this is an indicator that is, it's got some cachet because it's been around so long, and that's a huge number for an economy like ours. And jobless claims numbers were stronger than expected. We saw the prior revision was up a little bit, but we came in below the consensus range and about 100,000 below the prior revised number. So strong number there. And then last but not least, the Dallas Fed came out this morning. This number, we talked about it last week. There was a regional Fed number that was off the charts. This is the same thing. And now what I think is doubly important is that the prior number for February was, and they've got some language here that they sampled the February report before the storm. And so you would have thought that March would be, since it includes data after the storm or during the storm, that this would have been a negative number, and that's why they had a consensus range for it to pull back. But geez, I mean, incredible strength there. So, I mean, again, if you're just looking, you see a 17.2, which for February, which in and of itself is a pretty strong number. And then, you look at March with a 28.9, and you'd say to yourself, if you didn't know anything else, where was the storm? Yeah. What it didn't affect anything, at least as far as manufacturing goes. And just to bring it all together, the Atlanta Fed with their GDP now, we're getting in the last couple of days of the first quarter. We highlighted GDP now about a month ago when it was showing first quarter strength. It was maybe near 10%. And we've seen that the kinds of things that I was highlighting earlier with some of the weakness that's creeping in, the GDP now estimate has fallen to a level just below 5%, which is still a pretty strong quarter. But you can see the blue chip consensus now and the GDP now estimate are pretty much right on top of each other, somewhere around 4.7, 4.8%. So, pretty good quarter, but not the way it was looking a month ago. And part of the reason, and this is a chart that I pulled up because we've been talking about, some of the states that have been locked down more. So this is the back to normal index that Moody's created, and this was posted on CNN. So the blue represents the United States as a whole, and compared if pre-COVID March of last year was 100, we're at about 85%. But a state like New York is about 74%, and a state like Florida is 95%.
Mhm.
So you can see there's a 20% difference in terms of economic strength between Florida and New York, and the rest of the country is somewhere in the middle. And we're going to head on now. These first couple of slides I have are things that we've been talking about. Regular viewers will know that we've talked about shipping quite a bit. So I actually, before shipping got really front and center last week, I had a couple of slides about shipping anyway. One of which is that the spreading of the congestion hit Brazil, and some of these things are getting crazy enough that, like, this is an article that was talking about a giant boat that was hauling logs instead of ore. The ships are few and far between in some cases, and so they're getting taking stuff that they're not really typically taking, and that can create its own problems. These ships are specialized to carry certain things, and it might seem like not a big deal, like, oh well, you're carrying logs instead of say iron ore. The problem with that can be, like, how much does it weigh? Does the stuff move around? I mean, these ships, there have been sinkings where stuff shifts suddenly, isn't ballasted properly. So this is kind of a risky thing, but there's money to be had here, and again, this is a sign of economic stress, where things are actually happening too quickly for the system to keep up. And it's worth remembering that we're just passing stimulus. Hasn't actually gotten even into the system yet, but we're stimulating an already overstimulated, very strong, as we looked at back here, an economy that's very strong, generally ramping up, and we've got more stimulus on the way, and we're running into these kinds of situations that you would normally see at a market peak. So I can only think that that type of thing could continue. And now here we are at the most interesting thing. And it had to be, given our focus on shipping here the last few months, and then probably the biggest shipping story in years happened with the Evergreen shipping lines, which that's a Taiwanese shipping line that was operated by a Japanese company, and it got stuck in the Suez Canal, and everybody heard about it. This is a view from a container ship that was behind it, and one of the things that I think is fascinating, first of all, is just this was in the narrowest part of the canal, right at the south. So they were coming out of the Red Sea and going north. And the way they do it is, think about when there's road construction and it's down to one lane, and they've got the guy who's got the stop sign there, and they stop everybody in your lane. And then there's the pilot truck that takes everybody from the other side, and they come through, and then they let 20 or 30 or 40 cars go through. The guy in the pickup truck turns around, and then you go, and so that's what they do in the Suez Canal on a regular basis. They have one-way traffic in these really thin parts of it. And so the Ever Given was in a convoy of 20 ships. It was headed from south to north. It was number 5 in line. There was some heavy winds. It was in the middle of a sandstorm. Not sure if that was the exact cause for this to doink into the side the way it did, but kudos to the guy behind him for coming to a stop. I mean, they don't have brakes. It's not like, so he managed to woe it down and take a picture. So of course, there's been memes. And this is, we can't talk about the Ever Given without, talking about memes, but I think memes are important for a number of reasons. One is that everybody got involved. There's humor, humans manage to laugh about things, but it also encapsulates some pretty complex paradigm is essentially to just make fun of it and laugh about it. So, everybody, a lot of the memes had something to do with how giant the ship was compared to the Egyptian response. So, this one hit home for me because my spring break to-do list didn't get done either. I was like this guy. So, but it does, we start to think about, okay, why did this happen? And there's been not a lot of, it's like a lot of accidents. You got to wait for the official report. The official report's going to take a year usually. So whether it's a plane crash or a ship type thing like this, or Tiger Woods's accident, you don't get the full report until long after it's not newsworthy anymore. So we don't know exactly what happened. They're blaming the wind, and wind is certainly something to think about. And it's one of the reasons why I pulled up this picture here. This just shows you how much of the profile of the ship. This is another container ship, but it's similar size.
Gigantic wall.
Yeah, it's a sail. It can catch just, a gust of wind is going to push against that thing, and it's got to have a lot of strength and drive, and the rudder and the bow thrusters and all that stuff has to be braced against that tendency to want to have it shoved one way by the wind. This is a chemical tanker here on the right. First of all, it shows you how much less of a wind sail there is for a tanker compared to this container ship. And secondly, this brown here, this line is the water line. So this guy's empty. Because normally if he was full of product, this part would be submerged and he would be right down where the red would be at the water line. So even though he's empty and floating high, he still doesn't have anywhere near the amount of profile that a container ship will have. And so it got stuck in the side. And again, this was another series of memes, was about this digger guy here. And all I'll say about this is the memes were particularly poignant, but they pointed out the completely ineffective response that the Egyptians had for this. The Suez Canal, somewhere around $5 billion a year is what they get in tolls from all of these ships. Is that enough? I don't know. What I do know, and it's certainly not news to anybody, that the Egyptian system is, there's a lot of corruption over there. They would admit it. So $5 billion a year is coming into the top. I don't know how much is getting siphoned off, but they had this guy and
the bulldozer guy,
and they had this guy, and this was all they were able to get there for a day. So it really shows that if they completely eliminated the corruption, would a $5 billion a year budget be enough to maintain the waterway the way it needed to be maintained? Probably dredged, probably widened, have more equipment nearby. I don't know, but I do think that one of the things that's going to happen from this is the Suez Canal is going to raise its rates, because everybody just saw how important it is. The statistics that I got on this is that 12% of global trade and 30% of all container volumes on the planet went through the Suez Canal. That's a rate of about $400 million an hour. And if you do the math for 24 hours, that's $9.6 billion a day.
Mhm.
So even in just a week, we're talking it was close to $60 billion of economic damage directly. And then, of course, it's thrown everybody's off because it's not just that it was a 6+ days delay, but it's the ships that are waiting on these ships and so forth. It's a synchronized machinery that it's going to take more than 6 days to get everything back, because it's all supposed to be running pretty much at maximum anyway. So there's not a lot of slack for them to be just all of a sudden turn it on and say, oh, we'll get back to normal. So this was a big deal, and it's going to result in higher shipping rates for sure. Maybe the Egyptians will find a way to get the stuff in there. It was obvious that not only did they not have the proper sized equipment, one of the things that ultimately was necessary for them to refloat the tanker, which was refloated about 4 hours ago, was the size of the tugs. The tugboats that they had in the Suez Canal, by what I was reading, were 1/5 or 1/6 of the size of the largest tugs. If you've got the biggest ships in the world, and this Ever Given, let's just go back and look at him. This ship is over 200 feet longer than the biggest U.S. aircraft carrier. And it displaces more than twice as much weight. So my understanding is you could take two of the largest U.S. aircraft carriers and stack them on top of each other, and it wouldn't be as big and it wouldn't weigh as much. And so that's just a sign of how big these things are. And, part of what they have to do, and part of the reason why this thing got stuck so deep, is that because of this sail factor and the amount of profile there is above the water, they have to carry a lot of weight in the bottom, and they do that with what's called ballast, and it's ballast water and other materials, but it could be heavy metal type stuff, but in this case it's mostly water and fuel, and so they make it extremely heavy at the bottom so that it won't blow and tip over. Well, we've been seeing where that's happening anyway, and so it's probably a reason why this thing, when it jammed into the side, it went in so deep, because it weighed 220,000 metric tons. That's just an enormous amount of weight. They finally got a dredger on the scene. Here's the BBC had put this out to kind of give you an idea of, this is a side view of the canal. If you could look at this, it was actually the ship was into both banks. More on the front end, but still even the back end was in, and that's why it took so much time. They finally got a dredger down there. The dredger was 2,000 cubic yards of material an hour, and initially they estimated that 20,000 cubic yards of material would float the boat. Well, that didn't happen. They actually had to move 30,000 cubic yards of material, an enormous amount of stuff. And finally, of course, 4 hours ago, they did get it floated. It's not under its own power. They're taking it to a wider part of the canal, towing it, and then they're going to do a complete inspection to make sure that there's not any problems. Because one of the things that you could have here is that because it was basically hung up on both sides, this enormous amount of weight in the middle could really stress the hull and potentially crack things. So they've got to make sure that nothing's untoward here before that they could let it go. But what are some of the lessons that we might learn here? I actually picked this picture. I put it here in our sequence, but I actually took this picture before we got any of this going, and I was talking about Brazil and these unusual cargo things. So this was before. So this headline was actually a day or two before Evergreen got the ship hung up in the canal. And what are they doing? They're going to order 20 more of these ships. I don't know. This is a we've been showing this. This is at least the fourth large accident involving container ships in the last 6 months. We've seen 3 incidents where at least 100 containers went overboard in rough weather, including the one on the one Apis back in October lost almost 3,000 containers out of about 20,000. So I think that we're starting to see where the container and shipping like this has become just an integral part of the global supply chain, and we're running into a problem with size and scale that you just can't continue to scale this up without there being some problems like this. And I think that we're at a kind of a stopping point where these ships may need to be re-engineered. Maybe no maybes about it. They're going to need stronger engines. They're going to need stronger bow thrusters, all sorts of behind the scenes stuff that costs a lot of money, and you can't engineer what's already existing. So I think we're looking at one of the themes we've been talking about since the beginning of COVID was the onshoring and how global supply chains have really created a lot of havoc. We didn't make any PPE in this country. We had to get it from China. Stuff that was in China was having trouble getting here because containers are all over the place. There's a shortage. We've had these shipping issues, and now we have this. And I think all of this is a really solid impetus to rethink the global far-flung supply chain and provide some actual monetary incentives to onshore production, because shipping rates are getting out of control. In some cases, this is a spike that's going to go back down, but shipping rates went up by like 500% and 600% last week. I mean, enormous numbers. So shipping rates in general are going up. The supply chain itself is lengthening because of the other port congestion. We've seen port congestion in LA, Long Beach, in Singapore, Brazil. We see this. So calendars are lengthening out. Stuff's not getting there. That costs money. And then the fact that there's pretty good chance of loss. So I think that just as an overall investment theme, the idea of onshoring and shortening up and rethinking of global supply chains, it's not just an idea. I think this is a trend that has got some legs and is really probably of a secular nature that is going to be a number of years before we see that it runs its course. And so I think everybody should think about that. This headline just says what I just said a lot faster than I just said it. I should have pulled this up. But that's it. That's kind of the that's the lesson that we're learning here If we're looking at things like crude oil and some of the commodities that are being traded, we're seeing these things increase quite a bit. I mean, crude oil backed off a little bit from earlier this month, but this is a year-to-date chart that shows crude was 48.50 at the beginning of January, and here we are closing out the first quarter $13 higher. That's 27-28%. That's a pretty big jump for one quarter.
And you're seeing that at the gas station, that's for sure.
Yeah, and other commodities are doing the same thing. Lumber, and this is in a world where we're only just starting to come out of this global pandemic recession. I mean, the U.S. is way ahead of Europe, and other parts of the world, like Africa, didn't have much of a problem at all. But in the grand scheme of things, these kinds of problems shouldn't be happening in an economy that, if we go back to, I'm going to go all the way back to this right here. We're still 85% in the U.S. of what we were last year. We shouldn't be seeing these are the kinds of strains that you see when an economy is overheating. And we're getting it now. And we just passed $2 trillion worth of stimulus. And they're talking about three more.
Another three on top of that. Like,
slow
down.
So anyway, we're seeing. I think the idea is you want to the values still going to continue to work in this stock market. I think these kinds of things, especially with value being things that include some of your commodity cargo type deals, like Exxon Mobil is a holding of mine. Exxon's doing just fine this year. These are stocks that didn't work for a decade, and they're working now, and they're working now because you can see the runway. If crude oil is doing what it's doing now, in an economy that is still year over year not as strong as it was, it really is going to be a problem. Problem in the sense of higher crude prices is a problem for the economy, but for individual pockets of it, some of these value stocks, great opportunity.
Yeah.
So that's kind of where we're at. One other point, I guess, it just goes back on the ineffective response by the Egyptians. They didn't even get it done. It was a Dutch firm called Smit Salvage that is apparently the guys that you call for something like this. And so Smit went in there. They were the frontline salvage company. The Japanese were in there as a second support company. A lot of people, including the U.S. Navy, were saying, "Yeah, we could help," but they never were anywhere near a position to help. But this is pointed out. I'm reminded of certain things when you have things like this. I remember the Exxon Valdez when it in the late 80s, when it hit the rocks coming out of Alaska. It showed how terrible the response was. They supposedly had all these things that were supposed to work, and they couldn't get the crude oil contained on the water. They had a lot of stuff. So it's not just the Egyptians. They had a lot of things on paper that were supposed to work, and it just didn't when push came to shove. Same thing with a BP oil spill about a decade ago. Those blowout preventers, all that stuff was supposed to work. When push came to shove, it didn't work. So here we're seeing push comes to shove. It always takes an event like this to show that maybe on paper you're ready to respond, but when it actually happens,
When the rubber hits the road, it's a little bit different.
yeah. So I can see, first of all, there's a shortage of tugboats. Uh, big tugs are necessary. They need them all over the world. They didn't actually get this thing going. They had to bring 2 tugs down from Europe. They started steaming those tugs there as soon as this happened. Smith said, let's get the closest tugs. I think they were in Italy. They had to sail them across the Mediterranean and then come in from the top of the Suez Canal and come down towards this blockage. But the size of the tugboats that the Egyptians had that were first working on this problem were literally 1/5 and 1/6 of the size of the tugs that ultimately got the job done. So I need to do me some research as into who builds big tugboats, because there's going to be a good market for that.
Yeah, absolutely. Well, I mean, if they keep building the ships bigger and bigger too, you're going to need bigger and bigger ones. So,
yeah, I mean, you're going to be needing a lot of engineering. I've read, as you might expect, I dove into all sorts of the blogosphere, and I went to G Captain a lot. I'll give G Captain a shout out here. If you can see this website, this is a maritime shipping website that they were all over this. They had a number of podcasts, tons of articles, tons of diagrams, and everything. It was a great resource to give me a lot to think about. And these guys were talking about not only do we need more big tugs, but things like bow thrusters with the kind of sail that you get a huge wind gust that's pushing a big high profile ship like this. The size of the bow thrusters, the size of the engines, and the maneuvering engines, all of these things haven't changed much. All they've done is just keep making the ships bigger. So they've got to basically make all of that stuff more muscular inside out. So whoever does that business is going to have a lot of business,
which adds more cost and everything else to it in the long run. So, well, good, Tom. It was very informative. Learned a lot about the shipping industry. I know that's your passion, so that we got to learn a heck of a lot about that. So thank you very much for today.
You're welcome.
Everybody.
And it's not just it's partly a passion, but partly I think what we're doing, or my interest in it, is that nobody else is really talking about this kind of stuff. And yet we found out exactly why I've been looking into it, which is how important it is to the whole global economy as it's structured right now.
That everything is connected together, and if that just one simple thing happens, it can completely throw everything else off. I mean, the whole system is stressed to the point that it's an absolute perfection, and any problems that we have, we end up completely throwing the whole system off, it seems like.
Yeah, and this is an out of sight, out of mind industry.
Yeah.
Nobody thinks about ships. I was reminded during this that, at one time, and it wasn't that long ago, that New York Harbor was the busiest port in the world. New York Times had a dedicated maritime section with reporters that's all they did. They don't report on that anymore.
Yeah.
New York doesn't handle near as much cargo as it used to, and on a real basis, and then on a relative basis, it's much less. I mean, it's probably not even a top 20 port, maybe even not a top 50 port in the world.
Yeah.
So so the media that's located there, they're not covering this whereas they used to.
Absolutely. Well, Tom, thank you very much for that. Folks, thank you so much for joining us today. As always, you can find us on all the major podcast channels, but especially on Apple Podcasts, Google Podcasts, and Stitcher channel as well, and on Rumble and on YouTube. So depending on where you watch it, you can find us anywhere you go, or you can go directly to the BK website, www.bkwealth.com, and you'll be able to find our episodes there as well. So thanks a lot. We'll see you guys here next week. Please feel free to put comments in the comment section, and we'll respond to those as they come in. So thanks a lot, and have a great day.
Happy Easter.
Happy Easter, everybody.
Give it,